Hello everyone, my name is Viet and I am finally back to trading after 2 months break. My house was burgled at the end of March and I have basically put aside everything just to recover from that incident. A lot of things were stolen, amongst which were my notebook for trading as well as the laptop that I use to do my trend following system trading. So here we are 2 months later. My partner and I have recovered and we're still recovering, and now it's time for me to return to options trading. Thank you very much for everybody who have sent in their support, for those that knew me through the Forex forum and also privately in my real life. Thank you so much for your support and your kind words in the last few weeks. It really did help to put me back on my feet. There has been some changes with regard to my options trading. So I'm gonna go and talk about them quickly first before moving on to show you the trade that I'm putting on for this month. My options broker, Saxo Bank, decided that my tradings in the first few months of the year didn't meet their guidelines to have commission free. So what has happened from now on, I have to be trading with a certain volume. So if I go below that, they're gonna charge me a 10 USD trading commission. So what you see here, this used to be the list of all of the currency pairs that I was watching. And in my previous trading videos for February and March, you can see that I do put on quite a number of trades on most of these pairs. However, going forward, the minimum size that I can trade with is 50,000 units. So that's half a standard lot, which restricts my trading to just a few pairs. So the pairs that are highlighted in yellow are the one that I can trade with 50,000 units, and they have the lowest margin rate. The one in blue, I can also trade with 50,000 units, but they have a higher margin requirement. I don't know why they happen to be British pound pairs, and my currency for the account is also in British pounds. For everything else, it's going to be 100,000 units or one standard lot. One lot is way too big for me to be trading given my account size is less than £5,000. Going forward from now on, my trading will be restricted effectively down to these 9 currency pairs. And because of that, I really have to choose the pairs that I think would give me the best result given the way that I trade options. So I've just done my analysis for the month, looking at the weekly and also the daily chart, and these are the pairs that I'm going to be taking trades on. So the first pair that I want to trade is USD CAD. Bring that up. Now this pair has been mostly ranging on the weekly time frame since September last year. I say mostly because there is a slight hint that this pair is slowly trending upwards. You can see it's made higher highs and higher lows. So there's definitely price action to suggest that it's crawling up, but it's not a strong move at all, rather messy. Now my analysis tells me that the most likely scenario for this pair in the next 4 weeks is that the ranging behavior will continue. Therefore, I'm looking to trade what is effectively an iron condor on this pair. So on my other screen, I have the trading platform. So this is what it looks like. Very interesting, isn't it? No candlestick, just a whole bunch of numbers. And that's why I don't show this, because it's not really interesting. So what I want to do is I'm going to be selling a call at 132 and then I'm selling a put at 125. Where is 132? So 132 is up here and 125 is down here. Let me just put in some lines so we know. So 132 and go at 125. So what I'm doing effectively is that I'm making a bet that in the next 4 weeks, price will not exceed 132 and it won't go below 125. So that's why I'm selling a call up here, collecting some premiums, and I'm also selling a put down here, collecting some premiums. And my view is that the pair is most likely to be ranging. Now the reason why I decided to choose this pair to trade among the others is the fact that the strikes that I'm looking at happens to be very close, and in fact it's actually outside of the blue bands that I have here. With options trading, my main goal is to be trading on the right side of volatility, which means that I'm trying to put my strikes outside of where volatility is least likely going to be in the next 4 weeks. And the blue lines is what I've put down here. So on the top band, we're looking at 131.43, and I'm looking to sell a call at 132. So this is great. My strike price is well outside of that. On the lower band, it's at 124.89, and my strike is at 125. Not quite there, but close enough. So I'm gonna take that. I'm gonna do that right now, and I'll move over the deal ticket so you can see. We're looking at June 20th as the expiration. In fact, let me just show you something else. I hope you can follow this with me. So we're looking at call option, 20th of June expiration, strike prices. Now I can actually sell a call at 133 if I wanted to. Where's 133? So 132 is already outside of this band I'm looking at. 133 is even higher than that. So technically, I should have chosen 133 instead of 132. Now, the reason why I didn't do that is because of this. If you look at the prices that are available for strike at 132 and strike at 133, if I was to sell 50,000 units at 133, I would collect 42.5 Canadian dollars. To do that at 132, I'm collecting almost double at 90.5 Canadian dollars. And since both of them are outside of my safety band, I have the ability to choose whichever one I think would give me the higher return. And in this case, it's going to be a 132. Where's the deal ticket? There we go. So we're going to be selling USD CAD 132. Expiration is 20th of June. We want to do cash on that. Now you can see because of the bigger size, the margin required is also larger. And this effectively means that I can't do what I normally did a couple months ago, which is to have many trades on many different pairs. I'm not able to do that at the moment due to the relatively small account size that I have. I think I have just under £5,000 at the moment. It is a challenge, but it's something that I can work through. And in the future, I do have plans to add more to my trading account so that I am able to take on more trade. Because the idea of options trading is that you have to take on as many trades as possible so that you put the statistics on your side. But for now, I have to work with what I can do. So let's do that, just making sure the numbers are correct. USD CAD, 132 strike, June 20th expiration. And we want to sell. So I'm receiving a premium for that. Sell a call at 132. Okay, so this is the ticket. I always take a photo of that. Let's call that. At the same time, I'm going to be selling a put at 125. So bring that ticket up. So this is USD CAD. Move it over here. Strike price at 125. So it's going to be this one here. 50,000 units. Cash. Just checking margin. Wow, margin is not much at all on this one. I wonder why. Anyway, it doesn't matter. Double checking everything. Okay, so there it is. My second deal ticket. So those are the two trades that I put on for USD CAD. Now, if you're wondering where are my other two trades, because a proper iron condor going from trading options with stocks and equities, you're supposed to have 4 individual trades, 2 sell trades and 2 buy trades. Well, I've already discussed this in my other videos. The Forex options market is a lot thinner than for stocks. So the strikes that I want to cover at is actually not available as yet. So depending on where price move, if I need to cover, I will then put on the cover. If it starts to move up, I can cover this position. If it starts to move down, I can cover for this position. The beauty of this strategy is that within this period of 4 weeks, it can only do either one or two things. It can be higher than 132, or it can be lower than 125, and those are my danger options because it means that I will be taking on a losing position. However, if it finishes anywhere between 132 and 125, I effectively win on both of my trades and I get to keep the premiums that I receive. So that's why I'm doing this on a longer time frame. The next trade we're looking at, next and final trade because of margins requirements, is on the British pound Canadian dollars. This pair has recently been in a steady downtrend. You can see here on the weekly time frame, sellers has been in control, particularly in the past 2 to 3 weeks going back. They're very strong. However, the pair overall is still showing an uptrend on the longer time frame weekly. So you can see starting from September 2017 up until now, it is showing higher highs and higher lows. Technically, no lower lows has been made yet. So depending on the time frame you look, you could say that this is a pullback, it's going to continue to go up. For the purpose of my trading, I'm only concerned about the next 4 weeks. And according to my analysis, this pair is bearish. So I want to be putting on a bearish trade. What I'm looking at, I'm looking to sell a call at 178. So 178. There we go. Let's put that aside for now. So why am I choosing to do this? In a bearish market, what I like to do is I like to sell calls above the current market price. And 178 is as far as I can go. And if you look at these two purple lines here, they form the middle band on my chart. When I'm looking to sell a call on a bearish move, ideally I like my strike to be protected by these purple line. Obviously, if I'm selling a strike up here, it's going to be great. This is okay too. What I don't want to do though is I don't want to be selling any strikes that's below this purple band. So this is reading at 176.79. I don't want to be taking on any sell call position with a strike lower than 176.79. And in this case, the market allows me to do it at 178. So slightly above that, 130 pips above. And I'm happy to go with that. So let's do it. British pound Canadian dollar, strike at 1.78, expiration 20th of June. We need to go cash, 50,000 units. So selling this position is going to net me 132 Canadian dollars. Just to check margins. Margin is that's fine. So there you have it. For this month, I only have 3 trades put on to 2 currency pairs. We've got USD CAD, I sold a call at 132, sold a put at 125, and for British pound Canadian dollar, I sold a call at 1.78. So what I'll do is when these options expire, I'm gonna make an update video to show you the result of these trades. So thank you very much for watching my video, and I will see you in my next one.